Hello traders, hello everyone, my name is Gregor and welcome to a new episode of Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro dollar, euro pound, gold, S&P 500 and crude oil. Now firstly, looking at the euro dollar, we are seeing some weakness for the last few weeks, if not months, but still, I mean, this can be either a free wave drop for a wave D that can belong here, very big ongoing triangle or consolidation if you want, since 2016 lows, or is this free wave drop part of this ongoing wave 4 that belongs to a bullish trend? For now, I think that this very interesting support is approaching if we consider that we can count 5 waves down here on the 4-hour time frame. In fact, we are also seeing a potential ending diagonal forming in a 5th wave. As you know, ending diagonals usually occurs at the end of the trends and normally they provide very low volume and momentum, but usually when this one picks up, well, the usually sharp moves occur in the opposite direction. We also have this very strong RSI divergence, which may suggest that we are, yes, in a 5th wave and that weakness can be limited. Also keep in mind that we have seen a very strong drop on stock market yesterday, or if you want, already at the end of last week, but still euro dollar were able to hold those supports. We haven't seen any aggressive selling on euro dollar despite this risk of sentiment across the board. So in my opinion, if rally will occur on stocks, even if just short-term rally, I think that this could help euro dollar to stabilize even further and potentially gain more upside momentum. Now let's take a look also on euro against pound. Now euro pound is still somehow trapped in this very big consolidation from 2016, now approaching the lower side of this consolidation. So I think that there can be a period where we will see sooner or later a shift to the upper side of the range, because I want somehow to focus on this market with the basic technical approach. Since we don't have any very clear patterns, I want just to keep things very simple. So if we are trading to the lower side of the range, I will be expecting a reversal to the other side, especially if the substructure within this drop is in free waves, like in our case. So from that highs here in of March 2020, we can actually see here that market came down with 3 waves, while we can also count 5 subwaves within wave C. So in my opinion, there is a chance for a recovery. In fact, yesterday the market produced a very nice reversal here above this trend line resistance. Broken corrective channel line actually suggests that market is headed higher, either for a wave C or a wave 3, but in either case we should see a 3 wave recovery minimum away from that April lows. So I think that there is room for this pair to recover in the short term towards 87.60, potentially if market will go a little bit more aggressive to the upside towards 89 level. Now the reason why pound is coming to the downside is also probably due to still increasing COVID cases. I know that lockdowns have been removed, but there's speculations after recent remarks that actually people will have to be vaccinated in 2 months from now, those who will want to visit clubs. So this could actually be somehow negative for pound, because that's just one part of the industry. Who knows what will be necessary for other industries. So somehow maybe this will trigger protests, maybe like something like we have seen in France. So if that would be the case, of course, this may not be positive for pound, and especially not for the economy, if people will not want to be vaccinated. Now let's take a look also on gold. Now gold is still somehow trapped in the range, so my big picture hasn't really changed much. I'm still observing this to be a wave 4, probably ongoing wave 4, which can be a triangle, maybe a deep wave 4 if we see broken 1700 level, then support could be at 1650, but in either case I think that this is a correction on the way up. Now also looking at the daily chart here, why I favor a triangle is because again the US dollar has seen a very strong move across the board recently, but gold was still able to hold the support. Now imagine if dollar turns to the downside, I think that this could be very supportive for precious metals. Now looking here at the substructures of this triangle, well, there was a very nice and strong rise here, the first leg since end of June, but afterwards we have seen just a consolidation, moving prices to the right. So in my opinion, this looks like a ongoing consolidation within uptrend. Also, let's keep in mind that this was not such a big wave C. If someone would label this to be maybe ABC structure and you would expect this to be a top and you are turning bearish, well, this wave C is quite short compared to wave A, so it's not really in a context of ideal pattern. So that's why I'm referring to still to these higher prices for a wave D, which can be the case within a triangle as long the market is trading above 2019 trendline support. So in my opinion, there is room for more upside here on gold. Of course, just be aware of another retest of 1790 level before market really brings in more strength here. Now let's take a look also on the S&P 500. Now the S&P 500 is coming to the downside. What is really important is that market is now trying to break below this trendline support connected from waves 2 and 4. So this broken channel, Elliott wave channel, actually indicates whenever this happens that new correction is going on when the market breaks wave 2, wave 4 trend line. So I think it's actually very healthy for market to see some pullback, to catch the new breath here, because after all, we are expecting this wave 4, another healthy pullback or consolidation that can be very similar here compared to the wave 2 of the same degree. So I'm not surprised actually to see this kind of weakness that could resume through the next few days, maybe even weeks after any kind of a rally. What I'm looking at here is also broken trendline support by an impulsive price action. So I'm looking for more weakness here, especially after this wave B rise. So even if we see some kind of a recovery here in the next few sessions, maybe towards the end of the week, there I think can be limited upside as we approach this Monday open. Now let's take a look also on crude oil. Now crude oil is showing a very similar pattern actually. Market is coming to the downside quite aggressively. We are seeing a broken trendline support when looking at the daily chart. At the same time, we have divergence on the RSI, so we have to respect what the market is doing. Based on Elliott wave principle, it was crude oil that definitely has been moving into some very extreme levels, and after this recent OPEC, firstly non-agreement from with OPEC, then Saudi Arabia finally has managed to reach a deal where they can actually pump more oil, and this was just another trigger for more weakness here. So because you have more oil on the markets obviously, and if of course demand is still the same, this brings crude oil to the downside. So in my opinion, there can be a step into a new correction here, especially if we take a look on the 4-hour chart, where we can see that market make an overlap with this higher with this wave 1 degree. It fell below 66.60. So this actually suggests that market is not trading impulsively anymore on the bullish side. And if we also respect this broken trend line here, then obviously we really have to be aware of a new consolidation here on crude oil. The next very important thing is that market has managed to break this lower trendline support. Now, always when you are expecting market to stabilize after a free wave drop, well, this trend line is probably the most important. You have the upper trend line. Let's say that this that you assume that this was wave A, you have a wave B and then wave C, and that's the area where you want wave C to find a base, and then you will wait on a reversal to confirm that market is ready to continue higher. But on the opposite side, if this same trend line is broken and price is accelerating rather than slowing down, well, that's typical evidence that market is trading in an extended lag, probably very sharp wave 3, which usually is the strongest of a 5-wave sequence. So here I'm looking for more weakness into wave 3 after this recent breakout, and expecting the price to continue towards $63. In the meantime, of course, we can see some kind of a recovery, but I think that market should stay below this level, which is $72 per barrel. So as long as this level stays in place, I think that there is room for more weakness, and we should respect that market can be headed into this kind of a correction before it may resume again back to the upside later this year. Traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you next time. Bye.